Welcome, welcome, deep divers. Get ready, because the crypto world, as we all know, moves at a breathtaking pace.
It really does. Blink and you miss something major.
Exactly. Narratives can shift in the blink of an eye, and what seemed like a solid possibility just yesterday might be entirely off the table today. We've just witnessed a pretty significant pivot, I think, in the U.S. government's stance on Bitcoin. And honestly, when you look at the recent history, it's a real head-scratcher.
Definitely raises some questions.
Today, we're plunging headfirst into the core of these seismic shifts. First up, we have some surprising and very definitive news straight from the U.S. Treasury Secretary himself.
The big one.
Yeah, putting a firm cap on any ideas about federal Bitcoin purchases. This stands in fascinating, almost stark contrast to the signals we've been getting from the White House for months.
Right, a total turnaround, seemingly.
And as if that weren't enough to shake things up, we're also going to unpack a truly fascinating market trend that shows institutional money isn't just sitting on the sidelines, it's flowing, but perhaps not where you might expect.
The Ethereum angle.
We're talking about a significant and sustained influx into Ethereum-focused investment vehicles.
That's right. Our mission today is really to cut through all the noise, the speculation, the rumors, the hopeful whispers that often dominate this space.
Yeah, there's always so much chatter.
And identify the crucial nuggets of knowledge that truly matter. We want to help you understand the profound implications of these recent developments for the broader crypto landscape, and most importantly for you, our listener.
Whether you're deep in it already or just curious.
Exactly. Whether you're a seasoned investor tracking every market move or just someone intensely curious about the rapidly evolving world of digital assets, our goal is to connect these seemingly disparate pieces of information, bring them together to give you a much clearer, more holistic picture of what's happening right now in this dynamic and, frankly, incredibly important space.
And to do that, we've pulled from some excellent, very recent reporting from Decrypt. Our primary sources for this deep dive include U.S. won't buy Bitcoin, Treasury Secretary confirms, by Sandra Letts.
Which just dropped, very timely.
Like a digital anvil, yeah. And also, Ethereum ETF inflows outperformed Bitcoin for the third day straight, by Vismaya V, giving us the latest, very telling insights on market movements. So let's unearth these insights together.
The U.S. government's stance on Bitcoin, a shifting narrative.
Okay, let's unpack this immediately, because the biggest headline of the day landed with, well, definitive force.
No ambiguity here.
None. On Thursday, August 14th, 2025, U.S. Treasury Secretary Scott Bessent delivered a definitive statement that essentially put an end to months of speculation and hope. The U.S. government will not be purchasing additional Bitcoin to supplement its existing reserves.
Told stop.
This isn't a maybe or a perhaps or a we're still considering it. This is a flat-out, unequivocal no.
And to emphasize just how definitive this statement is, Bessent said it himself directly during a Thursday morning appearance on Fox Business. He didn't mince words, which, is significant for a high-ranking official on such a sensitive topic.
Definitely. They usually hedge a bit more.
Right. He stated very plainly, we're not going to be buying that. That's a direct quote from the Treasury Secretary, and it carries immense weight, especially as it comes today, as we speak.
Right now.
The finality and timing of this announcement signals a clear policy decision that has been made and is now being publicly communicated, removing any lingering ambiguity about the federal government's intentions for direct Bitcoin acquisition.
So no more guessing games on that front.
Nope. For anyone in the market, this kind of clarity, even if it's not the news they hoped for, is incredibly important for setting expectations.
And that finality is precisely why this specific confirmation is so significant. Think about the history leading up to it, which we'll dive into more in a moment.
The buildup was considerable.
For months, there's been this ongoing discussion, this hopeful narrative circulated by various government officials that the U.S. government might actually become a direct buyer of Bitcoin.
A major buyer, potentially.
So for the Treasury Secretary, is essentially the financial czar of the country, to come out and say, unequivocally, we're not buying that, it just slams the door shut on that particular avenue of speculation.
Bang, door closed.
It's a huge clarification for the market, for investors, and for anyone watching the intersection of government policy and digital assets. It doesn't leave room for misinterpretation.
No wiggle room at all.
So why should this matter to you, our listener? Well, consider the profound psychological effect. When a major global economy, especially one with the immense influence of the United States, draws such a clear line in the sand regarding direct crypto investment,
It sends ripples, doesn't it?
It sends a powerful message far beyond its borders. It shapes perceptions of Bitcoin's role, not just as a speculative asset, but as something that a sovereign nation might or might not integrate into its core financial strategy or national reserves.
Right, because historically, nations hold gold, fiat.
Exactly. Historically, major powers have always held reserves in gold or fiat currencies. A nation of this stature stating a firm no to Bitcoin purchases can impact global sentiment, potentially influencing how other nations might view their own nascent or potential crypto reserve strategies.
It kind of sets a tone.
It's a very public declaration that doesn't just impact market sentiment. It influences how the world views the digital asset space's legitimate integration into global finance. This isn't just about an investment choice. It's about a statement of perceived legitimacy and strategic utility.
No. To fully appreciate the weight of Secretary Bessent's definitive statement, we need to contrast it sharply with the preceding months. All those signals emanating from the White House.
Oh yeah, the signals were strong, or seemed strong.
For a considerable period, Trump administration officials actively and quite vocally stoked the hopes of Bitcoiners by repeatedly floating the idea that the federal government could, and indeed should, acquire as much Bitcoin as possible.
That exact phrase, as much as possible, kept popping up.
It did. This wasn't just a quiet internal discussion or a passing mention. It was a repeated public pronouncement that built up significant anticipation and excitement within the crypto community.
People got really hyped about it.
Understandably, they saw this as a potential validation of Bitcoin on the highest level. The narrative from certain parts of the administration was very much one of potential, of a government actively exploring concrete ways to incorporate Bitcoin into its national reserves, perhaps even selling off existing assets to fund it.
And you can absolutely understand why Bitcoin holders were thrilled by this prospect. It wasn't just about the immediate price implications, although, let's be honest,
That was definitely part of it.
that was certainly a significant factor. But there were two major components driving that palpable excitement. First, there was the profound implication for Bitcoin's legitimacy.
A big one.
The idea that state-level acquisitions, especially by a global superpower like the U.S., would grant Bitcoin an unprecedented level of mainstream acceptance and legitimacy. It would essentially elevate Bitcoin from what some still considered a niche, speculative digital asset
To something truly considered on par with traditional reserve assets like gold or major foreign currencies.
Imagine the ripple effect globally. If the U.S. government was actively buying Bitcoin, it would send an undeniable signal to corporations, to other nations, to traditional financial institutions worldwide.
A huge signal like, okay, this is serious now.
That this asset is not just here to stay, but is worthy of serious consideration, integration, and perhaps even its own strategic reserve. It would have been a landmark moment for global adoption.
Absolutely. A game changer.
Then, of course, there was the highly anticipated deflationary impact. This ties directly into Bitcoin's fundamental economic design.
The fixed supply.
Exactly. As many of you know, Bitcoin has a strictly finite supply. Only 21 million coins will ever exist. Unlike fiat currencies that can be printed by central banks, Bitcoin's supply is capped.
No quantitative easing for Bitcoin.
Right. So the prospect of massive state-level purchases had the potential for a significant deflationary effect on Bitcoin's price. If a major entity like the U.S. government started accumulating hundreds of thousands or even millions of Bitcoins,
It would dramatically reduce the circulating supply available on the open market.
basic economics dictates that if demand skyrockets for a limited supply, especially a fixed one, the price is highly likely to increase significantly.
Supply and demand 101.
So Bitcoin holders weren't just hoping for a stamp of governmental legitimacy. They were also anticipating substantial upward price pressure if the government became a major sustained buyer. It was a powerful combination of perceived validation and potential market appreciation that fueled this widespread excitement and speculation.
And these weren't just vague hints or back-channel whispers, you know. We had specific, high-profile figures voicing these ideas directly.
Right, it wasn't just rumors.
For instance, in March, not long after President Trump established an initial federal strategic Bitcoin reserve via executive order, White House AI and crypto czar David Sachs explicitly told Decrypt that both Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick would have the final say on determining whether to purchase additional Bitcoin.
So identifying the decision makers.
Exactly. And the talk was even around exploring budget-neutral methods, which implied innovative approaches like potentially selling off other government reserve assets, such as gold, to fund these acquisitions.
Selling gold to buy Bitcoin.
Wow. That clearly indicated a serious discussion was happening at very high levels within the administration, exploring the financial mechanisms for such a move.
Definitely more than just spitballing then.
Furthermore, Bo Hines, who is the executive director of the president's working group on digital assets, was particularly vocal and consistent in his advocacy. He repeatedly said, in private and in public, that the Trump administration wanted to acquire as much Bitcoin as it possibly could.
He seemed really committed to that idea.
He didn't shy away from this stance. He even testified to this effect before the U.S. Senate Banking Committee in June, explicitly stating his view and emphasizing how consistently he had communicated this message at various conferences and forums.
So very public about it.
Very. This wasn't just idle chatter from a junior staffer. It was a consistent public message from officials deeply involved in digital asset policy, creating a clear expectation in the market.
So despite all these repeated public pronouncements, all the talk about wanting to acquire as much Bitcoin as possible, all the discussions of budget-neutral methods and high-level decisions, the plain truth is.
Poof.
Yeah, plans for such acquisitions simply never materialized. For months, we heard the rhetoric, we saw these officials speaking publicly, detailing their intentions, and yet the actual purchase never happened.
It didn't happen.
It's that classic political scenario where promises are floated, hopes are built, and a clear narrative is set, but the concrete action just doesn't follow through. It's a striking example of the gap that can exist between declared intent and actual policy execution.
And adding to the curious nature of this unfulfilled promise, late last month, the White House released a sprawling, comprehensive 168-page report on crypto policy recommendations.
Right, the big report everyone was waiting for.
This report was highly anticipated by the crypto community, especially for any details it might provide on the Trump administration's crypto reserve plans, given all the prior public statements. Yet, it notably omitted any details on the subject of acquiring additional Bitcoin.
Nothing, just left it out.
Completely absent. This was a particularly telling omission, especially given the prior months of high-profile public statements and the significant expectations that had been built.
Had to raise some eyebrows.
It was a strong, if subtle, signal that perhaps the internal consensus on active purchasing wasn't as solid or as unified as the public rhetoric suggested. It was a glaring blank space where many expected concrete plans.
And then, earlier this week, we got another crucial piece to this puzzle. Bo Hines,
the vocal advocate,
the very vocal advocate for these Bitcoin purchases, announced his departure from his White House role, effective immediately.
The timing.
Right. While we can't draw direct cause and effect conclusions, the timing of his departure, coinciding so closely with this definitive statement from Secretary Bessent and the prior omission in the policy report, certainly adds another layer to this shifting narrative.
It paints a picture, doesn't it?
It paints a picture of internal deliberation and perhaps differing viewpoints, ultimately leading to a firm decision being made and publicly communicated. It feels like pieces are quietly falling into place, revealing a behind-the-scenes decision-making process that has ultimately led to this very clear, contrasting stance.
Yeah, things lining up in retrospect.
You can almost think of it like a very public tease.
Right.
A grand announcement that a highly anticipated movie or concert is coming, everyone gets excited, trailers are released, promises of a blockbuster experience are made.
And then, radio silence.
And then, quietly, the project is either shelved or an entirely different, unexpected announcement takes its place, leaving fans scratching their heads. That's what we've seen with these Bitcoin acquisition plans.
A big build-up and then...
Nope. A big, publicly hyped promise that just quietly faded away into the background, leaving many wondering what happened behind the scenes and why the rhetoric didn't ultimately translate into reality. The expectation was built, and then it simply dissolved.
Now, while direct purchases of Bitcoin on the open market are clearly off the table, Secretary Bessent did endorse the notion of a U.S. strategic Bitcoin reserve.
Okay, so that's key. They're not getting rid of the reserve.
No, not at all. This is an absolutely critical distinction. This reserve wasn't just a new idea floated by Bessent. It was actually established earlier this year by President Donald Trump via a March executive order.
Ah, right. The executive order.
So the core concept of the U.S. holding Bitcoin as a strategic asset isn't being dismissed outright. The key, however, and where Bessent's statement provided such clarity, lies in how this reserve will be built and maintained in the future.
How it grows, basically.
Exactly. It's not about acquisition in the way people hoped, but about specific management.
And this is where Bessent's clarification is absolutely crucial for understanding the government's approach. He made it abundantly clear that this strategic reserve will only be grown in the future by similar seizures from law enforcement.
Only seizures.
This means no active buying on the open market, no trading gold for Bitcoin, no budget-neutral exchanges. He stated very precisely, we are going to use confiscated assets and continue to build that up.
Okay, so using seized assets.
But he added another significant policy change with remarkable clarity, clarifying, we're going to stop selling that.
Stop selling seized Bitcoin. That is a change.
It's a truly notable shift because previously, some Bitcoin seized by law enforcement, often from criminal activities, may have been sold off to convert into fiat currency.
Right, they'd auction it off sometimes.
Now, the definitive policy is to seize and hold, ensuring that the existing reserves are not depleted through sales, but rather accumulate solely through legal enforcement actions. It marks a very distinct shift in how these assets are viewed and managed.
So, the reserve grows, but only passively through law enforcement wins, essentially.
It seems like it.
To give you a concrete sense of scale for this existing reserve, the Treasury Secretary also provided an estimate of the U.S. government's current Bitcoin holdings. He stated that the value is somewhere between $15 billion to $20 billion in value at current prices.
15 to 20 billion.
Wow, it's a truly substantial figure, placing the U.S. government as one of the largest holders of Bitcoin globally, even without any active purchasing strategy.
That's huge. Where did it all come from then, if not purchases?
It highlights that they already possess a significant amount obtained entirely through specific legal means, specifically law enforcement seizures from various illicit activities such as darknet market operations, ransomware payments, and other forms of cybercrime.
So proceeds of crime, basically.
Essentially, yes, this isn't theoretical. It's a very real, very large stash of digital assets accumulated over years.
This seize and hold strategy for the strategic reserve carries a lot of profound implications. What does it tell us about the government's view of Bitcoin, at least from this perspective?
Well, it strongly suggests that Bitcoin is being managed primarily through legal and enforcement means, right? Rather than being seen as a currency or an investment vehicle to be actively acquired and integrated into national finance.
More like handling confiscated goods than building a treasury asset.
Kind of. It positions Bitcoin more as a digital asset that can be illicitly obtained and subsequently confiscated and managed by the state, rather than something the government seeks to accumulate for its own economic benefit through market operations.
It's very different philosophy compared to how traditional gold or foreign currency reserves are managed.
Completely different. It frames Bitcoin squarely within the realm of asset recovery and criminal forfeiture, rather than economic strategy. It's almost as if it's viewed as a problem to be managed rather than an opportunity to be leveraged financially.
A subtle but important distinction.
Exactly. This distinction is critical to grasp, and it speaks volumes about the current official perspective. The previous discussions, remember, involved acquiring via budget-neutral methods, which explicitly included possibilities like selling gold or other existing government assets to purchase Bitcoin.
The proactive approach.
That implied a proactive financial acquisition strategy, a deliberate choice to integrate Bitcoin into the nation's financial toolkit. In contrast, the current confirmed strategy is purely based on acquiring through law enforcement seizures.
This is a reactive approach.
Precisely. This represents a fundamental difference in how the government interacts with cryptocurrency. It's not about embracing Bitcoin as a new financial tool for national reserves. It's about managing assets that have come into its possession through legal enforcement actions, specifically targeting criminal enterprises. This shows a very different philosophy about how the government views and intends to hold digital assets, not as a proactive investment, but as a reactive consequence of policing.
So let's quickly recap the key players and how these sands have shifted, because it's a dynamic cast, kind of confusing sometimes.
Yeah, lots of names involved.
We had President Trump, who laid the groundwork by establishing the Strategic Bitcoin Reserve via executive order in March. Then Secretary Bessent, the U.S. Treasury Secretary, who just delivered that definitive no to purchasing additional Bitcoin, while clarifying the seize and hold policy.
The final word, apparently.
There was also Howard Lutnick, the Commerce Secretary, who, along with Bessent, was originally said to have the final say on budget-neutral purchases. David Sachs, the White House AI and crypto czar, was the one who conveyed that Bessent and Lutnick would have that final decision-making power.
Connecting the dots there.
And of course, Bo Hines, the executive director of the president's working group on digital assets, who is a particularly vocal and persistent advocate for acquiring as much Bitcoin as possible, but who has now recently departed his White House role.
The advocate who's now gone.
It's a complex cast, all playing a significant part in this evolving narrative, ultimately leading to today's firm declaration.
The obvious next question, though not explicitly answered in the sources, is why? Why this policy shift might have occurred.
Yeah, what changed?
It's a high-level analysis, but we can connect some dots. The rapid, definitive clarity from Secretary Bessent, especially after months of the White House stoking hopes, that curious omission in the sprawling 168-page policy report released late last month, and then Bo Hines' sudden departure. All of these elements together paint a clear picture.
Suggests some internal movement.
It strongly suggests that there was significant internal deliberation, perhaps differing viewpoints, or even political pressure within the administration regarding the feasibility, legality, or maybe public perception of direct government Bitcoin purchases.
Could be any number of things.
Ultimately, a firm decision was made, likely at the Treasury Department, to close the door on direct government purchases. It speaks volumes to the complexities of crafting policy in new, rapidly evolving sectors, especially when there might be a lack of full consensus, varying priorities across different government bodies, or indeed powerful traditional financial lobbies at play.
Yeah, always politics involved somewhere. What this tells us about policymaking in highly dynamic, politically charged areas like cryptocurrency is truly fascinating.
It's a great case study.
It really highlights the inherent tension that can exist between different government departments or even within the same administration. You have different groups with different mandates, some focused on technological innovation, others on financial stability, others on law enforcement.
All looking at it through different lenses.
These groups can have different perspectives and priorities for a novel asset class like Bitcoin. Ultimately, it often comes down to the final authority of key figures, like the Treasury Secretary, to draw a definitive line.
Someone has to make the call.
It shows that even with a strong public narrative built up over months, the actual policy can pivot quickly and definitively once a core decision is made and communicated from the highest levels. It's a powerful reminder that political processes, especially concerning new technologies, are rarely linear.
So what's the practical takeaway for you, the listener, from this whole saga? It's this. Government policy, especially in emerging and complex areas like digital assets, can be highly fluid.
Very fluid.
And subject to intense internal debate and shifting priorities right up until a definitive official statement is made. Do not invest or make significant financial decisions based on hopes, floated ideas, or even consistent public pronouncements that lack a clear, final policy decree from the authoritative body.
Don't trade the rumors, basically.
Exactly. Wait for the definitive word, like the one we received today from Secretary Bessent, before making assumptions about government action or market implications. The landscape is constantly shifting, and only confirmed, concrete policy matters. Speculation, no matter how well-founded it seems at the time, is exactly that. Speculation.
Sound advice. Always wait for the facts.
Beyond Bitcoin, the rise of Ethereum ETF inflows.
Now, let's shift gears entirely from government policy to market behavior, because here's where it gets really interesting, I think.
Where the money's actually moving?
Yeah, showing how Wall Street might be positioning itself regardless of the U.S. government's direct purchasing strategies. While the U.S. Treasury is saying a firm no to directly buying Bitcoin, the private institutional money is moving, and it's moving big, but with a surprising new focus.
Indeed. What we're seeing is a significant and, frankly, quite telling trend. Institutional investors are flooding into Ethereum funds at a rate that is truly noteworthy.
Flooding's a good word for it, based on the numbers.
It's not just a trickle, it's a substantial, multi-billion-dollar flow of capital, indicating a growing and sustained appetite for exposure to Ethereum among sophisticated financial players. It's a clear signal that big money is making strategic allocations within the crypto space.
And not just sticking to Bitcoin.
And not just focusing exclusively on Bitcoin as the sole entry point or preferred asset. It implies a broader understanding and acceptance of the diverse digital asset ecosystem.
And for those of you wondering why institutional inflows into exchange-traded funds or ETFs are such a crucial indicator, Why do we care so much about ETF flows?
Well, it's because they represent a significant step towards mainstream adoption and serious institutional interest. When large institutions think pension funds, hedge funds, sovereign wealth funds, and traditional asset managers start pouring substantial capital into these structured investment vehicles, it's a strong signal.
It means the big players are comfortable.
It means they view the underlying asset, in this case, Ethereum, as a legitimate, viable, and potentially lucrative part of their portfolios. ETFs offer a regulated, liquid, and accessible way for these traditional players to gain exposure to volatile assets like cryptocurrencies.
Without the headache of custody and wallets.
Exactly, without having to directly purchase and custody the digital assets themselves, which often comes with its own set of regulatory and operational challenges. So when we see significant ETF inflows, it signals that Ethereum is moving firmly into the realm of traditional finance's radar, being treated more like a traditional commodity or equity.
Okay, so the numbers. Lay them on us.
The numbers really speak for themselves here, according to the latest Farsight Investors data. On Wednesday, August 13th, 2025, Ethereum exchange-traded funds, or ETH ETFs, clocked an impressive $704 million in inflows.
700 million in one day.
Yep. Now, to put that into stark contrast, and this is where the picture gets very clear, Bitcoin ETFs saw only $86.7 million in inflows on the very same day.
Wow, that's a huge difference, like almost 10 times.
Nearly. That's a massive difference. Ethereum ETFs received significantly more inflows compared to Bitcoin ETFs on that particular day. This isn't just a slight preference, it's an overwhelming one, showing where institutional capital is being actively directed.
And what makes this truly compelling is that this wasn't just a one-off anomaly. That's the key here, right?
That's the crucial part. This actually marks the third consecutive day of Ethereum's dominance over the alpha coin, Bitcoin, in terms of ETF inflows.
Alpha coin, meaning Bitcoin, the biggest one.
Right. Now, when we say alpha coin, for those unfamiliar, we're referring to Bitcoin's long-standing position as the largest and most influential cryptocurrency by market capitalization. It's been the foundational asset of the crypto market.
The OG.
So the fact that Ethereum has outperformed Bitcoin for 3 days running in terms of these significant institutional inflows is not an isolated event. It's a sustained pattern,
A trend is forming.
showing a clear, consistent, and accumulating preference from institutional capital. This isn't just a blip. It's a developing and quite significant trend that demands attention.
3 days. What's the cumulative impact?
And if we look at the cumulative impact of this sustained interest, this 3-day lead has been substantial. The sources indicate it has delivered $2.2 billion to ETH ETFs following Monday's reco. Even with the truncation, it's clear we're talking about a massive, multi-billion-dollar inflow into Ethereum-focused investment products in a very short period.
$2.2 billion in 3 days into ETH ETFs.
That's what the data suggests. This isn't just a subtle shift in allocation, it's a significant reallocation of capital and a strong vote of confidence from institutional players who are clearly positioning themselves in the Ethereum ecosystem. It suggests a strategic shift rather than just a tactical one.
To put it visually, imagine you're watching two powerful rivers, the Bitcoin River and the Ethereum River. For a very long time, the Bitcoin River was always the widest, the deepest, the one carrying the most volume of water, always dominating the landscape.
Really, main channel.
But suddenly, over the past 3 consecutive days, you're seeing the Ethereum River swelling significantly faster day after day with a clear and accelerating current.
Getting wider, faster.
It's not just a momentary surge. It's a sustained, powerful flow that's visibly outpacing the historically dominant river. That's precisely what we're witnessing in real time in the world of crypto ETFs. A powerful, sustained flow of institutional money into Ethereum that is clearly outpacing Bitcoin's own inflows, shifting the dynamic of the landscape.
So this raises an important question. What does this marked shift in institutional preference from Bitcoin to Ethereum ETFs truly signify for the broader crypto market?
Yeah, what's the takeaway here?
It suggests a maturing and diversifying landscape within institutional crypto investment. Bitcoin has long been the primary entry point for traditional finance, often seen as digital gold, a store of value, a hedge against inflation, a safe haven asset.
The standard narrative.
But now we're clearly seeing a deliberate move by institutions to explore beyond the alpha coin, recognizing the different value proposition that Ethereum offers. It's a move from solely holding a store of value asset to embracing a programmable asset.
Absolutely. This suggests that Wall Street is broadening its focus significantly. They're no longer just looking at Bitcoin as the sole gateway or even the primary long-term play in crypto. They are actively positioning this year for the second largest crypto, Ethereum.
Betting on number two, big time.
This isn't just about simple diversification. It indicates a deeper understanding and appreciation of Ethereum's unique capabilities and its central role within the wider decentralized ecosystem. It's a recognition that the crypto market is much more than just Bitcoin, and that distinct investment theses exist for different digital assets.
Right, they're seeing the different use cases.
It shows a growing sophistication in institutional approaches to this asset class.
And there are several potential reasons for this notable shift, each offering a distinct investment thesis. One major driver could be a search for higher growth potential. While Bitcoin's value proposition is its scarcity and digital gold narrative, Ethereum's ecosystem is far more expansive and dynamic.
It does more stuff, basically.
Right. Its underlying technology, smart contracts, allows for the creation of decentralized applications, DApps. This powers a vast landscape of innovation, including decentralized finance, or DeFi,
Which is huge.
which are essentially financial services built on blockchain, like lending and borrowing platforms without traditional intermediaries. Then there are non-fungible tokens, or NFTs, which are unique digital assets like digital art or collectibles representing ownership on the blockchain.
Digital art, collectibles, gaming.
These are just a few examples. This broad utility means Ethereum is not just a store of value, but a foundational layer for a new digital economy.
The world computer idea.
Furthermore, Ethereum's ongoing technical developments are incredibly attractive to institutions. Its successful transition to a proof-of-stake consensus mechanism known as the merge dramatically reduced its energy consumption
That was a big deal. Much greener.
and set the stage for future scalability improvements such as sharding and Layer 2 solutions like rollups. These improvements are designed to make the network faster, cheaper, and more efficient, which is crucial for enterprise-level adoption.
Making it usable at scale.
For institutions, this ongoing innovation and a clear roadmap for scalability and sustainability make Ethereum a compelling long-term play, offering a different kind of growth trajectory compared to Bitcoin. It's a bet on the future of programmable money and decentralized internet infrastructure.
So connecting this back to the overall narrative of our deep dive, it's a fascinating, almost poetic contrast.
It really is two very different stories happening at once.
On one hand, the U.S. government, through its Treasury Secretary, draws a very firm line, essentially saying no to direct Bitcoin purchases. They'll build their strategic reserve, but only through legal seizures, viewing it predominantly through a law enforcement lens as assets to be managed from illicit activities.
Government says hold, don't buy.
On the other hand, the private institutional market is showing robust and increasingly diversified interest in the broader crypto ecosystem, particularly Ethereum, pouring billions into its ETFs.
Institutions say buy Ethereum.
It's almost as if the market is evolving and maturing on its own terms, finding new avenues for investment and growth, entirely independent of direct federal government purchasing strategies. It truly highlights the dynamic, multifaceted, and increasingly independent nature of the crypto world, carving its own path despite, or perhaps even because of, governmental clarifications.
The market marches on. How true. Okay, so to recap our key takeaways from this deep dive, we've witnessed two major, concurrent, and almost diametrically opposed shifts.
Big shifts.
First, the U.S. government, through Treasury Secretary Bessent, has issued a firm no to purchasing additional Bitcoin, instead confirming a seize-and-hold strategy for its existing substantial strategic reserve. This marks a definitive end to months of speculation and hope among Bitcoiners regarding government acquisition.
Door closed on government buying.
Second, and in fascinating contrast, we're seeing a significant, sustained institutional pivot towards Ethereum ETFs, with inflows dramatically outperforming Bitcoin ETFs for 3 consecutive days, signaling a broader and more sophisticated institutional embrace of the crypto ecosystem beyond just Bitcoin.
Institutions embracing ETH ETFs in a big way. It's this interplay that's so compelling, isn't it? While one door closes, the prospect of direct federal Bitcoin purchases, other, perhaps more significant, doors are clearly opening, demonstrating the market's resilience and capacity for self-direction.
The market finds a way.
Institutional investment is not just continuing, but it's diversifying, showing robust and growing interest in Ethereum, the second largest digital asset. It paints a picture of a crypto market that continues to mature and find its own path, even as government policy clarifies its specific boundaries and approaches.
Two different worlds, almost. Government and market.
It suggests a bifurcation in how digital assets are perceived and utilized by different entities.
Indeed. And it leaves us with a final provocative thought for you to consider. If a nation's strategic reserve is now built solely on confiscated assets, purely through law enforcement seizures, rather than through active market acquisition or budget-neutral exchanges,
Which is the official stance now.
what does that truly imply about how governments will view and interact with decentralized digital currencies in the future? Is Bitcoin, for the U.S. government, purely a tool for law enforcement and asset recovery, a means to control and mitigate illicit activity?
Or is there more to it?
Or will its broader economic potential, its unique properties as a decentralized, immutable asset, eventually lead to a reevaluation of its role in a sovereign nation's financial strategy? It's a profound question about perception, utility, and the long-term relationship between states and the rapidly evolving world of decentralized digital assets.
Absolutely. It's a lot to mull over. How might this very clear divergence between direct government policy and institutional investment strategies in the private market truly shape the crypto landscape in the coming years? What stands out to you about these developments?
Lots to watch.
We're certainly going to keep an eye on how these fascinating trends evolve and what new nuggets of knowledge emerge. Until next time, keep diving deep.